You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everyone. Welcome to the Infinite Banking Mastery Podcast. Thank you for being here. I appreciate you. So today I wanted to talk about flowing your money like banks do. Because remember, banks don't let money sit. As soon as they receive your deposits, they are doing something with that money right away, and they are keeping that money moving. They are keeping it in motion. So to kind of go over this and explain it more fully, I thought I would use an example that Nelson Nash put together. He created it. I have the blessing of being able to have that information, and I think he did a really good job of describing keeping your money in motion versus letting it sit. And so he uses an example of a paint store owner. And in the year is 1988, long time ago. Okay. Nelson Nash was an older man. So in 1988, he says this paint store owner could go to the store and buy a gallon of paint wholesale for $6. So he was able to go purchase a gallon for his store. He paid $6 for the gallon. He brought it back to his store, put it on the shelf for sale so he could sell it. And so he was then able to sell that gallon of paint to a customer for $8. So he had a $2 profit. And he could do that 10 times a year based on that 1 gallon, because as soon as he sold that gallon of paint at his own store for $8, he then could take that $8, go back to the wholesale store and buy another gallon for $6, and then come back, sell it again, and make another $2 profit. So each time he's able to go to the wholesale store, buy a gallon of paint for $6, sell it for $8, and then go back and use that money to go buy another gallon, that's called one turn. And so he's able to turn that 1 gallon 10 times per year. And so Nelson says, well, let's just say he takes 1 gallon of paint off of the shelf and instead lets it sit. He puts it off into a room, maybe a cellar, keeps it nice and cold, makes sure it's stored really nice so that the paint will still be good. And he leaves it there for 11 years. And in 11 years, it has appreciated to $18 now. Now it's $18 to go buy a gallon of paint. And so the difference in price there is $12. That's a $12 difference, which equals out to be compounding at 10%. So if he put that $6 and let it compound for 11 years, at 10%, it would get him to about $18. Okay, so pretty good, right? You know, if we're comparing it to money, you let your money sit there, you earn 10% return. Who doesn't want that? That's pretty good. You know, people are usually happy with a 10% return. It's pretty good. So, however, because he took that gallon out of commission and he put it away somewhere off the shelf where he could not sell it, he was not able to turn that gallon 10 times in a year. So that now he couldn't turn it not only for that 1 year, but for 11 years. So he missed out on turning that gallon of paint 10 times a year for 11 years. So he gave up the opportunity to earn $220 by keeping that can of paint in motion, by keeping it in his store and turning it every time he sold a gallon. He gave up the opportunity to earn $220 for instead the opportunity to earn $12 at a 10% rate of return. So I really like this example because I think it paints a really clear picture of what banks are doing versus what they are telling us to do. They are telling us, bring your money over here, let it sit, put it over here in these investments or in this CD or whatever, put your money here and let it sit. And we're going to give you a good rate of return and it's going to be all good. And why do they want you to let your money sit there? Well, because they want to use it, right? And in the meantime, they are taking that money that they're encouraging you to let sit there, and they are turning it as fast as they receive it, marking it up with interest, and selling it back to us. And so they end up making a much higher profit by keeping it moving rather than letting it sit. but they're telling us to let it sit. Sounds like a lose-lose for us, if you ask me. So in one of my earlier podcasts, I had read straight out of information that I have from an American Bankers Association meeting that happened in 1992. This is from my mentor, one of my mentors who gave me this information. In his brother, he was a banker. And so he was a part of a meeting that had this information. And that's where we received the information. It was from his brother's very own banking meeting. So I'm just going to read this again. I've read it before in an earlier podcast, but maybe you missed it. So because it pertains to today, I thought I would mention it again, just how the banks need our money. So it says, savings are a vital link in our national economy too. In order for businesses to get started and for individuals to borrow for needed items, banks need money to loan. And the fact is, individual savings accounts like yours are a prime source of that money. Because of a multiplier effect, every dollar in the bank becomes $6 available for loans and investments. Now, again, this was back in 1992. So actually, it's more like 10 times that they mark up the money. It's called fractional reserve banking. It is perfectly legal. And so that is what they are doing. They need our money to loan it out, to mark it up and loan it out. And that is how they are making their profits. So the bottom line is that you want to keep your money moving. And what better way to do it than to have your own banking system using a whole life insurance policy from which you can borrow funds from and pay yourself back with interest, be in complete control of your loan, and treat your own loan like you would any other bank loan. Pay yourself back with interest. There is simply nothing more powerful than these actions, and saving as much as you possibly can into a whole life policy to capture as much earning power as you can on as much money as you can. Because remember, every dollar that you fund inside of a life insurance, you will be capturing the earning power of those dollars forever until you pass away. So how many dollars do you want to capture the earning power of? A few? A little, as much as you can. I mean, I want to capture as much as I possibly can. I want as much of my money as possible to be earning for me for the rest of my life and just be creating this powerhouse of wealth. And there's nothing more powerful than storing up this cash in this way and then using it for the things you need, financing the things you need out of it, your next car, your children's education, your next home, your rental homes, paying off debts if that's a priority for you. There's nothing more powerful than doing it in this way. And then in the meantime, while you're using your own money throughout your life, you will end up with a large nest egg. You will end up saving up a nice amount for your retirement years. And as you're using the funds and paying yourself back, you're recycling those funds. So they're there again to use for your next project, your next investment, or for your retirement. And as long as you're pulling them out correctly, they will be accessible, income tax free. And remember that just because you are saving into a banking system, it doesn't mean you have to choose between this and some other investment. Yes, a lot of people use it for real estate investing, but you can use it for any type of investing. You can put your money into your policy and pull it back out for any other type of investing that you want to do, or that's something you want to do, crypto or buying gold or investing in the stock market. Really, it's not like you have to choose, well, I'm going to fund this whole life policy, or I'm going to go out and invest in these other things that I really believe in. You can do both. That is one of the most awesome things about this strategy, is that it doesn't keep you from doing something else that you want to do. And you have access to that money that you're saving into it all of your life without restrictions, not like a retirement account where you can't touch it till you're 59 and a half without a 10% penalty. This money you can access anytime you need it. And so it's just a very awesome vehicle. So it looks like this is going to be a slightly shorter episode today, but I do want to end with a quote. It's a quote that has to do with banks. It was said by Thomas Jefferson in light of yet another bank failure in recent weeks with First Republic. I know that that is highly concerning for many people. Just remember that it's not going to help any of us if we all rush out and go take our money out of the bank. We can't do that. That causes a major, major catastrophe. And we still need banks. We're still going to need them to move the money to pay our mortgages and things like that, because we cannot pay bills straight from our life insurance contracts. So we don't want the banking system to shut down. Of course not. But we can put our funds in a safer place, and we can kind of slowly shift them over so we have a good pool of cash in one of the safest financial institutions that you could possibly have your money with, and that is a life insurance company. So Thomas Jefferson had this quote, and it's one of the ones I really like. And he said, "If the American people ever allow private banks to control the issue of their currency, first by inflation, then by deflation, the banks and corporations will deprive the people of all property until their children wake up homeless on the continent their fathers conquered. The issuing power should be taken from the banks and restored to the people to whom it properly belongs." So I thought I would close with that quote from Thomas Jefferson. Thank you so much again for listening in. I hope you're enjoying some summer weather where you are. I'm in Washington. It's been super nice, about to get hot here. We're all excited over here. I look forward to talking and presenting again next week. And so I hope you all have a wonderful week. Until then, if you would like to connect and chat with me and find out if a banking plan would work for you and your family, or just look over your situation, your personal situation and your budget, and find out how we could make this work for you, if you're interested, reach out to me at Valerie@alphaomegawealth.com. I hope you have a great week.
This is the podcastfactory.com.